Last week we started talking about the tedious process of trading review and improvement. Today we should be able to wrap up that discussion, so don't go away. Hi, this is Tim from TradingStrategyGuides.com. Welcome back to our channel. In last week's video we started to discuss the process of reviewing our trades and using that review to identify possible improvements to our rules. Today we'll continue. Some parts of your trading system are fixed and can't be adjusted or replaced, while other variables are more flexible. They're fixed in the way that they're drawn or how they appear. For example, a fixed element would be support and resistance levels or supply and demand areas. Basically, all the things that complement your strategy and are completely essential for what you're trying to achieve is a fixed element. The variable elements of your trading strategy are the things around the fixed elements that help you spot a trading opportunity. One example of variable elements are your indicators. You can adjust the settings to see what works best for your system. For our strategy, we use the stochastic indicator, which is a momentum indicator. As a general rule of thumb, if you have more than just one element that's trying to show you the same thing in your system, then you should choose one of them and get rid of the rest. Having multiple things on your chart that show the same thing doesn't mean that it will be more accurate. Instead, you'll just have a lot of conflicting signals. You need to play with your strategy and tweak and upgrade your trading system slowly, one step at a time. If you're using the stochastic indicator, you need to test it with different settings to see which works better. If you're using a specific candlestick pattern or price action setup for your entry, you can test different variations of that setup. Maybe if you're waiting for a second confirmation candle, your strategy will improve. Instead of using arbitrary settings for the technical indicators that have no relevance to the actual market price, consider using a time period that has some bearing on the price. For example, if we notice that the market is in a 40-period cycle, then use that for the stochastic indicator. You need to systematically test every single variable in your system. This is something that you're not going to be able to do in a single day, but you'll accomplish this slowly over time while you get a better understanding of the market. You can list all the variables that you have changed through this process of optimization in your trading journal. The most important thing is tracking everything you do, because there is no point in backtesting your strategy without doing so, because you'll never see what actually works best. What I'm saying is that you should do this as a scientist would go about running a series of studies. Meticulously record every detail and go through them systematically, one change at a time, to be sure you see the results of each change you make. And of course, record the results. And remember, one result is nothing more than a wild guess. Trading is based on probability, so you're going to have to run multiple tests over time on each variable to be sure you get a representative sample of all the market times, days, or seasons. I do this using multiple trading platforms that run simultaneously on my test system so I can get more results faster. Reviewing past trades can reveal essential information about your trading that can lead to more accurate trades and better performance. You really need to review not just your losing trades, but your winning trades as well. Reviewing your losses and comparing it to your strategy will help you to know whether or not the problem is really with your strategy or if you're just negatively impacted by a shift in the market. Now, losing is part of the game, and some trades won't work out even if you're meticulously implementing your trading strategy. So you need to distinguish between losing trades caused by human error and normal losing trades caused by your strategy just not performing well in that particular market situation. You really have to look at your trades and understand the market for what it is, and then determine whether or not you really made an error or not. Reviewing your winning trades will help you make more profits later by capitalizing on your strengths. What you need to do is to build on good habits and trade only those setups that have proven in the past to generate the most profits. And remember, most trading is seasonal. For example, right now it's summer in the Northern Hemisphere, and I've taken an abnormal number of losses with my personal strategy. I've reviewed this strategy over the past few years and have realized that I go through a drawdown beginning mid-June-ish and ending mid-September-ish. But even during that time, I had some pretty big winners. I'm currently analyzing my strategy to see if I can change it to allow me to get those winning trades and avoid those whippy losers. In any case, I'm reducing my trade size during that time to lessen the impact of the summer trade conditions. Of course, all of this comes down to documenting all your trades in detail to be able to review them. This is another reason why a trading journal is important to your development as a trader. It's also the reason why I screenshot all my trades at the crucial times. Basically, when I identify the setup, when it triggers a buy or a sell signal, when it hits the target, or when it hits either the full stop or the trailing stop. I hope this video motivates you to look through your past trades because it will help you spot your good trades, the parts of your strategy that need improvement, the type of trades you should take more often, and the type of trades you should avoid. A lot of novice traders jump from trading system to trading system. You're never going to be a profitable trader if you're going to do that. Instead, you should constantly evolve and improve your own strategy through reviewing and optimizing your past trades. This will allow you to rely on your strategy completely because you've tried and tested it by yourself. And confidence in your system is extremely important. The only constant in this market is that it's never constant. It's always changing. So we need to make sure that we're constantly optimizing our trading strategy. Don't be afraid to substitute some elements of your strategy and test them too, if you believe it will improve your trading performance. It might sound like a lot of work, but trading is a job with lots of big money at stake, so you need to think like a professional and put in the hard work to achieve your goals. And that's it for today's video. Come back for my videos on Monday, Wednesday, and Friday at 3 p.m. New York time. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, smash that like below. Subscribe and hit the bell if you want to be notified of our videos in the future. Have a great Wednesday, and I'll see you on Friday.